Hi, Pradeep. Thank you so much for joining us. And at the outset, wish you, your team, and your family a very, very happy and prosperous 2023.
Thank you, Vijay, and wish you the same.
Thank you very much. So I see you have a nice, bright new logo behind you in the backdrop, an onward and upward kind of a logo, which is really what I wanted to talk to you about because, this whole logo is just one part of what I understand is a whole Union 2.0, which is what you're driving. So I'm really, really curious to understand what beyond the logo change are the contours of Union 2.0. How does it impact the way you do business? How does it impact your investors? How does it impact your distributors?
Vijay, this is I must say one of the final steps in the whole process transformation that we have been undergoing over the last 4 to 5 years, I would say. Starting with Daiichi coming on board as a sponsor, and as a result, our whole business model changing from being completely restricted to only Union Bank channel, getting the freedom to operate outside, being given all the support to expand our distribution to all other channels in the market. So that was a big transformation for us. And then also on the investment side, the whole process changed. And we took a very conscious call that we will be known for our process and we will be completely sticking to that, and clearly went to town claiming that it's process over people. So and that obviously has produced results on the business side. Our business from outside channels has been growing quite exponentially, especially in the last 2 to 3 years. Of course, it took some time to get traction after we started the process, but we invested significantly in that channel, created a team, put in a lot of efforts, to make an entry. And over the last 2 to 3 years, I think the response has been really, really encouraging, I must say. And to the extent that we now have on an incremental basis about 70 to 80% of our net sales coming from outside of Union Bank channel.
Wow, that is huge.
Yes, and we are quite pleased with that. And of course, we want both the channels to continue to grow at a fast pace. So that's been very encouraging. And so the logo happened because after all the changes on the business side, the way we do business, the way we manage funds, everything changed. We also thought that, it also needs to reflect in our looks. So, it's like, you've done a lot of things and your clothes need to reflect that.
Correct.
So, so the logo and the brand identity was a culmination of that process. And one big gap in our whole business was the website. So the launch of the new website logo, everything coincided, and this is a new phase.
Great, wonderful. It's a very bright and promising phase, I must say, with the arrow going straight up. So, how has 2022 been for Union Mutual Fund, Pradeep? I know you had some very ambitious targets that you'd set for yourself when we spoke this time last year. So, how is the year played out? What have been some of the big hits? What have been some of the big misses?
So, on the big hits, I would say we have continued to grow faster than the industry. So if you look at the net sales, our market share, which was 0.8% last year, I'm talking about equity hybrid category, which is a higher margin. From 0.8, it has gone to 1.3% in the industry, which is considered to be a very significant growth. But as you're well aware, the industry growth itself has slowed down this year compared to the previous year. So yes, the size of the big cake has reduced a little bit, but our share of it has increased, which is of course encouraging for us. And as a result, because of the slowdown in the growth, we have not been able to hit the AUM target that we had kept for ourselves. so
Right.
far, which was, of course, ambitious. But I'm still hopeful that over the next few months we will be able to compensate for that.
Okay.
The growth in business obviously has been a big achievement. And I must say, launching our new website and the new brand identity has been a very significant achievement for us. We have been working on it for the last year plus, and
Okay.
are very happy that we are able to launch it in the new year, because it's not just about the looks. Our new website will also offer a lot of facilities, a lot of information for all our stakeholders. So in that sense, I think this will help us to expand our business also. And this year, I must say, was also the year in which our process probably faced its biggest challenge so far, and
Yeah.
came out very well, I
Very
must
well.
say.
Absolutely.
So as you're aware, we had our CIO leaving, but all the claims that we have been making over the last 4 years were put to test,
Yeah.
and we were able to respond very well. And
True.
the process has been maintained absolutely meticulously, and there has been no disruption, and we are quite pleased and quite proud about that.
Yeah, the fact that you were able to walk the talk in, the biggest challenging moment speaks volumes about the maturity of the process. Absolutely no doubt about that. So
Yeah.
your new team is now well settled, all systems going.
Absolutely. I mean, it's been one of the most seamless transitions you would find in an industry, especially for a company of our size.
Right.
Now, continuing, with the earlier question that you had asked about the misses last year, I must also say that last year was a year in which the value stocks and the value strategy outperformed the growth strategy, and we were more growth oriented. And as a result, our short term performance took a hit last year.
Hmm.
But we are absolutely confident that that is a short term and a temporary hiccup, and we have full confidence in our process. And I'm sure as the months and years go, the performance definitely will go up further.
True, 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 true. So coming to the outlook for this year, Pradeep, there's a lot of caution among industry participants I speak with. Caution on equity, a lot of bullishness on fixed income. That seems to be a sort of a common thread that I'm picking up. And therefore, even in terms of business momentum, a lot of industry captains are asking distributors to renew their focus on the fixed income and the hybrid space, which has been sort of waning because of an equity bull market and so on and so forth. What is your prognosis for 2023 from a market point of view? And leading from there, what's your sort of business outlook for this year?
Well, I tend to agree broadly with what you said. See, on the equity side, if you're talking about short term, there are many headwinds that we can foresee. Okay, possible headwinds,
Yeah.
right? But the good part is that in our view, they are all shorter. The longer term picture is looking very, very positive, especially for India, because India seems to be the only large economy among the top 10 economies, the only one which is expected to grow at a very healthy pace over the next 3 to 4 years.
Yeah.
Right. So I think that augurs very well for the market, and not only for domestic investors. I think it will also attract a lot of foreign interest. So that should help the market. The combined interest of foreign and domestic investors should help us to withstand, any adverse developments that may be there. Short-term volatility is definitely possible, and I don't think one should even really worry too much about that, because if people start reacting to every development in the market, every development in the economy, you're never going to make money,
Yeah.
right? So you should have the ability to cut out the noise and stay close to your investment plans, your goals, and your asset allocation. And I see great opportunities for equity, but you're right. I think, an area which a lot of people have been ignoring for some time. I think, the time has come. This year could very well turn out to be the year of fixed income funds. The accrual levels are fairly good. While nobody can predict what is the peak of the cycle, it may be sometime during 2023, the absolute peak. And even if you don't catch the absolute peak, it's still a good time to get into duration funds, particularly the low risk fund, meaning low risk from a credit point of view, funds such as the gilt funds, because over the next 1 to 2 years, you are going to see a significant reversal of the interest rate cycle from all that we are seeing today. And for investors who have a 3-year horizon, after taking into account the indexation benefit, the post-tax returns can be quite meaningful.
Quite healthy, yeah.
So I think 2023 is a year in which investors and the distribution community need to give, I think, a lot more importance and close attention to the fixed income category.
Absolutely. So, leading from there, Pradeep, what are your plans for 2023 to dovetail into this business outlook? Are we going to see a lot more of fixed income products coming in from you, target maturity funds? I mean, what's on the anvil for 23?
So, what we are planning is that obviously we are not a fund house which is really known for launching too many funds, NFOs in the market. Yeah, you know that. Okay, unless we see a specific opportunity and which is very convincing for us, we will not come out with new funds. But we believe even our existing bouquet of funds are good enough to give very, very useful and very meaningful opportunities for most investors. And rather than confusing people with too many options, we would like to give clear choices which are differentiated for the investors and for distributors. So we expect that during this year, excuse me. So during this year, funds such as dynamic bond fund, gilt fund, etc., I think would gather a lot more attention and could perform quite well. I think investors would be probably better off looking at some of these funds rather than always chasing new funds.
Absolutely, that's a point that all of us should definitely consider. And I think the big message for distribution is to take a good look at duration, because it's been a while since we've stayed away from duration because of the way the cycle was. And those of us who've been looking at fixed income have, in the last couple of years, trained our minds to look at only short-term funds and banking and PSU funds and keep it safe, keep it safe, keep it safe, and keep it short. I think there needs to be a recalibration of our thought process in terms of don't necessarily keep it short. This is perhaps the time to start looking at duration products a lot more seriously. And like you said, for people with a 3-year horizon, there can be some meaningful capital gains opportunities that can come in on an after-tax basis. That's a point that we certainly need to take across to distribution very strongly. Thank you so much, Pradeep, for your time, for your very rich insights. Great to see a brand new look for Union Mutual Fund. And here's wishing Union 2.0 even greater success in 2023 and the years ahead. Thank you.
Thank you, Vijay. Always a pleasure talking to you.
Pleasure.